A lot of people put a huge amount of work into making their stock selections. They'll read the annual reports, they'll read all the analyst reports that they can get, they may even visit the stores or use the products and services of the company. Yet they find at the end of the day, the performance of their portfolio is not all that good. It's mediocre at best. And the reason for this, in many, many cases, is that they're not taking into account the behavioral biases, the sort of fuzzy thinking that goes on automatically in our minds that really blocks our rational decisions. And I'm going to just talk about 4 of these behavioral biases. I refer to them as get-evenitis, consolidatus profitus, tradophilia, and FOMO. So they may be strange sounding words, but let's have a look at them. Get-evenitis, that's the disease of hanging on to a stock if the price has gone down until you can get even. You want to be able to tell your partner, don't worry dear, it's going to come back again. The problem is if the stock has gone down, the chances are it's going to continue going down, and at best it's going to be a mediocre investment. Much better to sort of face the fact that you have a loser, you've lost money, and move on. The opposite to get-evenitis is consolidatus profitus. So that's the disease of always taking a profit whenever the price goes up. It looks great. You can tell your friends at the dinner party, I bought a stock and it went up 20% or 50% or whatever, and you sold and you took the profit. The problem is, what are you going to do with that money? And a lot of large-scale studies have shown that on average, people who sell just to take a profit end up putting their money back into the stock, into the market, in a stock that underperforms the one they got out of. So get-evenitis and consolidatus profitus are really 2 sides of the one coin. So people, as I said, generally hold on to losers and sell winners, whereas a lot of studies have shown that the opposite would be better. That is, to sell your losers and hold on to your winners. So what people do, you can say, is that they water the weeds and cut the flowers, when much better is to actually cut the weeds and water the flowers. The third disease I'd like to talk about is tradophilia. So that's the disease of just loving to trade. A lot of people would never dream of going to the casino and sort of betting on roulette or any of the other sort of poker machines in a casino. Yet when they get on their internet and start looking at their stocks, they trade far, far too often. It's so simple to trade on the internet and they get drawn into it. But studies have shown that on average, the more a person trades, the worse that they do. And I don't just mean that they're paying higher transaction costs, their performance diminishes. So instead of looking for those great companies that are going to make you money year after year, they think that they can get a short-term profit. But in the short term, the share prices are much more random than most people believe. So that's a disease of trading too often. In this regard, actually, women are better investors than men, because overall women trade less than men. Then the fourth disease, or the final one, is FOMO, and that's the fear of missing out, F-O-M-O, fear of missing out. And so you read about a particular stock, its price is going up, you think if I don't get in now, I'm going to miss out, instead of taking your time and evaluating the stock properly. So those 4 diseases, they really work together and just give you at best mediocre performance, but generally far, far subpar performance. So the great thing about Conscious Investor and Teaminvest is they work together to really eliminate those 4 investor biases or 4 investor diseases. Conscious Investor is the number crunching side of membership with Teaminvest, and so it provides an objective foundation for all your decisions. It filters the whole market, allowing you to just focus on those key companies that pass through very stringent and tight filters. Similarly, the Teaminvest environment really makes you alert to see if you're slipping into these investor biases. So it all works together, Teaminvest with Conscious Investor, to help you eliminate investor biases.